Okay, guys, today, Chris Bounds, the great Chris Bounds, good friend, known him ever since I started working at Jet Lending when he was having his events out there in what's the name of that little city?
Rudy's Barbecue.
Ruby's Barbecue. Yeah. So he's decided to share some knowledge today and help hopefully we'll help all of our investors in this community grow a little bit with the current environment that we are in. And it is an environment, whether you believe it or not. It is. Chris, what you seeing out there?
Yeah, it's a little weird. I mean, there's a lot of stuff going on. I see a lot of opinions on where things might go in the future. We're gonna have a crash. We're not gonna have a crash. It's gonna be the greatest buying opportunity ever, and everything in between. I've got a few opinions myself, but ultimately, when it comes down to it, inventory is low. There's still a lot of demand. A lot of that demand is being held back by affordability, and we're just not building enough. And that's kind of been the story for a while. And not a lot has changed other than the affordability factor, and that's just mainly because of interest rates.
So yeah, let's talk about those three things. You said affordability, inventory, and not a lot of inventory because nobody's building. Well, first of all, and you correct me if I'm wrong, I believe the reason, and we've talked about this in numerous details here at Jet Lending, the reason why inventory is low is because two things, in my opinion. One, during the refi boom, which was 2018 to 2021, or I'm sorry, 19 to 21.
Yep.
Little after COVID, it picked up big time. You know, you've got people in interest rates that are 2.75 to 3.25.
Yeah.
So essentially, for the next 15 years, those properties are no longer on the market.
Yeah, it's like 80% of mortgages out there are below, I think, 6%. And then I forget, I think it's about 70% of those are below 5%. So you have, and then the going rate right now is 7.5-ish. We're talking conventional. That's just 30-year average in the US right now. It's ticked down a little bit, but and then such a large percentage of those are, it's in the 4s, 3s, and then there's a few lucky folks that got it in the ridiculous 2s. But yeah, why would they trade in a 3.25%, a 2.7% mortgage for 7.5? Like, it would take something significant, like a job relocation, or maybe just financial hardship where they just have to sell. But even in that situation, they're probably better off from an affordability standpoint, hit the 2.7% than renting.
Yes, definitely. If anybody's watching this at any point in time, if you're in one of those properties that's a 2.75 to a 3.25, I mean, I'd even go as large as 4%. Right now, you don't sell that house.
No, if it's within that 2-point difference, it's a hard pill to swallow emotionally. But then the affordability factor, like, you have to really need or not just need, you gotta really want to. And that's usually going to be more from job relocation kind of situations.
Yeah. We just got back from an annual conference, the AAPL, Annual Association of Private Lenders, just the first day back in the office from being at that convention, and they put out a lot of data stating exactly what we're talking about. Like, 40% of the nationwide, 40% of those mortgages are not going to be moved. And you shouldn't. What you should do is say, hey, if I can afford to buy another house and rent this one out, that is good rental income because it will cash flow. Now, at the same time, if you can't, and like you said, if it's an absolute must that you sell that property, well, then you got to, but I think that's what's got a large number of, the population saying, oh, it's time to pump the brakes. Now, inventory, we talked about that being low. Affordability, you got people, 2-3 years ago, they would go out and buy a $700,000-$800,000 house, and those were selling. Now people are like, oh, whoa, pump the brakes. Interest rates have increased by 3-4% since during this time. I got to move down in market on what I'm able to afford, because Americans.
That part's a little different. I'm talking Houston, and then I pay attention. I live in a pretty decent neighborhood in Sugarland, and I see homes fly off the market, like at pretty close to list price, and they're 700-800 to million plus. So I think from an affordability standpoint, like if you've got a good paying job and you're well and affluent, it becomes less of an impact for you than if you're a first time home buyer or you're in that median to low median income range where it really impacts you. I mean, if you can afford the payments and you can get a home, it may not impact you as much, but the inventory is being hurt by two reasons. We're just not building enough, and there's not enough inventory recycling in the market now. They're just staying put. And then the affordability standpoint, we've had the wage growth has not kept up with home price growth.
Huge gap
over the past several years. Now, the one thing that has mitigated that for a lot of home buyers is interest rates just kept going down and down and down. They did that for like 10 years straight, pretty much. And then during COVID, it collapsed in the twos. So that has been the saving grace for a lot of folks being able to afford a home. But the opposite reaction to that is prices just went up faster. Yes. Now, when you have interest rates triple in 18-month period, like something has to give. And that's why we're just seeing if there is a real estate collapse, if there's anything that has collapsed right now, it's transactions. Like we're at a 20-year low in transactions.
Which is hurting a lot of people. I mean, there's you got lenders, whether it be hard money lenders or, long-term 30-year mortgages. I mean, I talk to Clint every day. And, he's like, hey, we're in a rough time. We see it maybe clearing up second quarter 2024. Sorry. But right now, people have they're uneasy. The consumer confidence is really not there as far as your end buyer. And I mean, we've had to tell our investors, like, look, if this is going to be a buy and hold or buy and sell, you got to understand, you're going to have longer hold times, and you have to mitigate those circumstances up front on the deal. You can't be buying things, at max 65% of ARV and, think that you're going to get 100% financing. And
it changed the investor game. Like I remember, so Eddie was talking for years before I even caught on in my head that the game was changing to a landlord market.
Yes.
And you saw hard money lenders like Jet that you really positioned some really strong and unique products to cater towards landlords. And then when I'm out there house flipping, I'm really like, I'm just getting beat left and right by landlords that are willing to pay a lot more because financially it made sense. They were able to get the loan product to help it cash flow with very minimum and oftentimes no money down. So that made sense. Right now it's a little different. I'm actually seeing wholesaling's always been there. It's just they're having to change who they're wholesaling to. It makes more sense to wholesale to the house flipper because the house flipper is going to get a decent discount, flip it, put it back in the market, make a quick buck. Whereas if your strategy is still long-term holds, you either need to buy it cheaper or you're going to have more money stuck in the deal. Or the third option, which in my opinion is the best if you can make it work, creative financing. Getting either subject to or some type of owner's financing that where you have greater control over the terms.
Yes. A lot of owner financing deals that have popped up. We're even offering it a little bit on some stuff that we're trying to offload as far as inventory, just to try to get some more capital and stuff like that. I mean, at the end of the day, you got to, as a smart business person or a smart real estate investor, you've got to be able to pivot with any market. And I think that's where a lot of investors mess up is they don't pivot early enough.
Yeah. I made that mistake. Like I should have transitioned more to the buy and hold, and I've talked about this in the other shows. But ultimately we were focused on house flipping and we didn't quite position ourselves in the buy and hold quick enough. I'm still all in on buy and hold. It's just I'm not necessarily like single family is a little harder. Multifamily, you got a little bit more flexibility in how we can make that work. But even on the multifamily side, it's changed that game. Where we're having to bring in private equity companies as opposed to doing an all out raise from LPs or equity investors.
Yeah, well, a lot of people don't realize also, as far as active versus pendings in an area, that will hurt your sale. You've got to be competitive as far as your ARV, and a lot of investors right now are still looking at what they can max sell that property for. And we're having to educate a lot of people, say, hey, no, you got to pump the brakes. So yeah, you've got 4 comps, right, that are selling at, I don't know, let's say 650, right? They're selling it at a 650 mark, but most of your comps are in the 600 to 590 range. And then you got a whole bunch down here that are really moving at 525. Where do you think your and we're talking about all same similar square footage. Where do you think your movement is? And to be competitive, and for any lender, they're going to look at what's moving quickest, especially on the hard money side, because we don't want the inventory sitting there forever. We don't have a crystal ball, and nobody does either, that says, hey, 6-7 months from now, when you're done with that rehab, interest rates are going to come down, because we don't know. So we got, and I told somebody this, you've got to underwrite it, not based off what the future is going to do, where you're at right now, because the crystal ball is not out there for anybody. Nobody predicted that we get 7.25, 7.5 interest rates 3 years ago.
And risk mitigate in worst case scenarios that you don't get that price.
Yeah.
And that could be refi out long term. You're going to rent it out, which, what does that look like? Are you negative cash flow? Can you support that? Are you going to put an extra 50 grand down just to make it work? Or do you have the margin to where, man, you could sell it at 485, but you'd break even, but at least you can get it off your books. Like, what does that look like? Versus you need 620, and if you get anything less than that, you quickly go negative. Like, maybe you should either renegotiate the terms or pass on the deal.
Yeah. I mean, in a lot. It's this time right now that we're in. I wouldn't say we're in it. Like, we're not in a crash yet. Everybody said that since I got into this business. We're headed for a crash.
We've been heading to a crash since 2016.
I know. Everybody's like, ever since I started December 1st, 2016, everybody's like, it's headed for a crash. We're headed for a crash. Well, when's it going to happen? Like, when are we
eventually
when are we going to have a 2008 again, so we can just get it over with and move on,
Yeah. I mean, I don't know. What I do know is we do have low inventory. It's hard to crash a market that just has record low transactions. Corrections happen, all this stuff. But at the end of the day, job market's still strong. The job numbers came out recently, and they're a little bit below expectations. And the previous 2 months have been revised downward. That's what the Fed wants, but it's still pretty stable.
Yeah.
So as long as people have jobs, even with high interest rates, someone needs a place to live. Homes will still sell. It's going to be a little different.
Yeah. I mean, and at the end of the day, you got to kind of pay attention to some other things. Cost of stuff with inflation. The reason why builders are not building, there's not enough spread on them building right now.
Yeah.
So they're, offloading their inventory. I mean, I know a guy at Lennar, he's really hurting for inventory, and they're not going to go out and buy 10 lots right now and put, $1 million homes up, and hope that they sell within the year.
Yeah.
They're having to hold their properties in inventory a lot longer because the interest rates are higher, and people are like, hey, I like where I'm at. I'm not trading up right now because, again, as you stated, my income does not support, the difference in interest rates right now. Like,
interest rates from a residential real estate, just all residential real estate, including multifamily and single family, construction starts and permits, they're down. Now, single family is slightly, if you single out single family, it's slightly up, but not a lot. It's just not about, we're so far behind, like it doesn't even make a difference. If you add multifamily in that, it brings it way down because they have really cut back.
Yeah.
I think it was CoStar came out with a report saying that the financial trigger for affordability on these multifamily projects, we've already passed that, meaning it just doesn't financially make sense to go out and start a multifamily project right now. Single family is kind of in the same boat. They have a little bit more tools that they can, because they've got the financing tools that they can help on the back end to help buyers get in to move inventory, because they can do buy downs and all this stuff. But at the end of the day, I mean, it's still a little risky for them because we don't know what the market's going to look like in 6-12 months.
Yeah. Yeah. It's just interesting that the market that we're in, it's like, I don't know, it's kind of a quiet but scared market. You know, it's like
I'm of the opinion, if you can make it work, and especially if you have a long-term horizon, like short-term, you just need to make sure you have your margins and you've got backup exit strategies. That's where house flipping, it works really well right now. And I've talked with a lot of folks that were buying long-term and they're doing a lot more flips now. But long-term, if you can make it work, even if it just barely cash flows after you've got you need some padding for, escrow for vacancy and repairs. But if you can make it work, you're going to be all right. Time rewards landlords as long as you manage it right.
Well, I mean, on the flipping side, the main thing you have to be paying attention to, and I've talked about this for years to everybody. It's like, you got to buy deeper. You got to buy it deeper, as deep as you can. Don't accept it at face value. Everybody's always accepting it at face value. Oh, well, there's no way that I can get it for this. Well, how long has it been on the market? How many times has it been in circulation? Like, I see these properties come in and come in and come in, and it's in circulation. And we will look at them, and then a month later we'll look at it again. And I'll tell the investor, I was like, I looked at this a month ago. So whoever's got it or wholesaling or trying to sell it, it hasn't moved in a month.
Yeah.
And they're trying to move it at the same price they did a month ago.
Yeah. So be patient. Yeah. The worst deal you can have is the one you're going to lose money on. It's better to not get a deal, especially if you're only doing 6-12 a year. A loser, I mean, it takes 3 deals to make up for a pretty bad loser. So you just don't want to be in the situation. You can ask me how I know that.
I mean, I'm sure because of your years of experience. So, I mean, you've done. I'm sure you've taken your bruises, like a champ, and moved on. We all have. I am learning a very valuable lesson right now, personally. I bought an investment property in Crystal Beach. Thought it was going to be an awesome opportunity. It is in the summer months.
Right now, Airbnb?
Yeah. Right now I'm eating the cost. I'm eating it. And it's put me into a situation that I have to make some adjustments, personally. But you don't quit. You just fight through it till you get back to those rental months. And then, hopefully it'll rebound and people will be like, okay, hey, I'm ready to rent again.
Yeah. You got to juice it when the market's hot.
So what I've learned is this summer, once it starts renting out, I'm not touching any of that income that's coming in. I'm going to put it to the side so that when next winter comes, I've got that extra to put towards it.
Yep.
And you figure out a way to get creative in financing and stuff. You never quit on anything, in my opinion. I mean, there's dark days for everybody, but you've got to figure out a solution to the problem and, hopefully get through it,
Yeah, you're learning or you're earning. You only lose when you quit.
Yeah. Never quit on anything. I mean, whether it be, buying real estate or flipping a property, you don't just give up. And I think that's a unique thing that most investors need to pay attention to is when you get in trouble, don't be afraid to ask for help. There's so many people out there like yourself, everybody here at Jet. I mean, I know for a fact you wouldn't hang up on anybody and be like, hey, I'm not going to help you, and that's what's extremely important is surrounding yourself in these times with good people that'll help you get through the hard times.
Yeah, especially hard money lenders, and I really enjoyed the relationship I've had with you and the whole Jet team. Just you have such a good pulse on the market from working with a lot of different clients, doing different types of products, and then your own personal experiences that uh, I'm always eager to hear, like when I see you at a meeting, hey, how's it going? What are transactions like? How many are your loan applications? Are they going up? Are they going down? And then I remember I was talking with Alex, I don't know, a month or so ago, and he was just like, we're so busy. Like, I'm not even running ads. Like, it's just insane. Can't
Yeah.
keep up. And I'm like, okay, well, I mean, product's moving.
Well, product's moving. I mean, we're just having to underwrite a little bit different, which is, hey, you got to make those adjustments
100%.
when it matters the most. That way you're ahead of the curve, and that way you know, you're not filing, chapter 13 or chapter 8 or bankruptcy. You're sitting here keeping your product out there and alive. That's what we've been able to do for 20 years.
Yeah, business is sailing. Yeah, the winds, the currents, everything's changing, and you just got to make corrections to make sure you're heading the direction you want to go.
Yeah, yeah, absolutely. So let's just kind of finish up here. Where do you crystal ball it a little bit? I know we talked about don't have one, but I'll give my opinion afterwards. But where do you think we're headed into this election year?
Like as far as the market.
Yeah, as far as the market.
Yeah, I mean, so they haven't done any new rate hikes. We've seen the job report come back if you're the Fed, they're probably liking that number. And there's some other things that are showing inflation's cooling. So my guess is we probably don't see another rate hike this year. Could potentially see some if that trend continues, could maybe even see some rate decreases next year. And you can imagine if you have any political sway and you're running for re-election, then you might do what you can to make that happen. At the end of the day, I think right now we have low inventory. Any decrease in mortgage rates is going to spur activity in transactions. And if that pent up demand, I've been telling this to realtors who are struggling with low transactions. I'm like, look, dig deep into your database, because it's like a pressure cooker. There's so much pent up demand. It's not that they don't want to buy a house. They do. It's just things aren't working out right now, but that will change. And when that changes and you've really cultivated that database, when that changes, you're going to have a wave of transactions, of opportunities, because everyone else is leaving. They're leaving the business. Same thing for the wholesaler, same thing for the house flipper and the landlord. If you really build your list, market effectively, talk to more people, even if they're not ready right now, when those winds change, you'll have you'll take a bigger piece of the pie whenever transactions do tick up. So I think year-over-year growth, price growth, single digits, fairly slow, at least in comparison to what we've seen over the past couple of years. I don't see negative long-term year-over-year growth, maybe negative in certain micro markets, and we've seen that in some parts of the country. But I mean, Houston's still positive. Nationally, we're still positive.
Yeah.
Year-over-year, we're still positive. Month-over-month, a little negative. Certain submarkets are negative year-over-year, but overall, I think we'll have single-digit growth. There's still demand. It's just from an investor standpoint, you've got to buy it right. If you buy it right, that's the one thing you cannot change in a transaction is your purchase price.
That's the only thing that you cannot foresee or predict. If you get it right up front, the other stuff will take care of itself. Yeah. You can get in a house, and we see this a lot. We see it a lot. I mean, guys will say, hey, I can do this for $60,000. Well, 2 weeks after we close it, and we agree with that number. 2 weeks after we close it, they open a wall, termite damage. They've got to reframe the whole house.
Yep.
Like, what? Or reframe half the house. And we're like, oh, Lord, well, hey, that's coming out of your pocket.
Been there.
Yeah. Yeah, it's coming out of your pocket. We've already underwritten it at 70%, so we can't go back in and give you more money.
Yeah.
As far as flippers out there. We need more of you. We need more flippers out there, because if you're out there and you're producing a product that's good, you're creating inventory, that's otherwise not livable.
Mm-hmm.
So any flippers out there that are watching this, hey, let's go. We need more inventory. But as stated, when you're out there trying to buy properties, pay attention, buy it deeper, take care of the upfront things that'll make you successful throughout the transaction. What you're buying it for, make sure you take a contractor over there and make sure you run your numbers correctly. Don't shortchange it just to try to make the deal work. I mean, that is gonna hurt you every time. Over the last 4 months, I think it's been at least a dozen phone calls. Rob, this is what's happened. I hear it. Man, look, I'm sorry. Let's see what we can do to get you some contractors over there that may be able to bid it a little bit cheaper than what you're finding. And that's what I've had to do for some clients. And they'll call back, hey man, that guy's working out great,
Yeah, you can change the numbers on the spreadsheet to make it work, but you can't change the actual cost.
Yeah, you can't change the actual cost. But I mean, again, if your price goes up and you get a one bid from one person, don't accept it at face value. Reach out to, somebody like you and somebody like me has like 280 loans. I can go in there and type in a zip code and see who's doing a flip in that area and say, hey, who are you using as a contractor? I need help. One of my clients needs some help. And I do that all the time. Like somebody will say, hey, I don't have a contractor. Okay, zip code, I'll call a guy, hey, who do you recommend? You've done quite a deal of it. Quite a bit of, and just when people get in trouble, it's funny. They either get ashamed and shut down, which, I mean, you get embarrassed, right? You don't know what to do. You get shelled up. At the end of the day,
it's okay to do that for 90 seconds, but no problem gets solved in that situation.
90 seconds, then, go gather your thoughts and ask for help.
Yeah.
It's okay. We're all human. We're all going to make mistakes. We're all going to move forward from those mistakes. You just can't give up. And that's my message. As far as 2024 is concerned, I think second quarter, everything's going to start opening up. Interest rates are going to start trending downward because, somebody's got to win an election.
Yeah. If we can get in the 6% before next summer, even 6.9 psychologically coming from like 7.9 or, I think some products even hit 8. That's good. There'll be a lot of buyers excited about that.
I'm going to predict 5.75 by July.
If we get 5.75, woo, that'll make a lot of realtors happy.
It would, right?
Oh yeah. Oh man. Buyers will be, just psychologically, because this is what happens. Like, I don't know how long this rate's going to last before it goes back up. I need to buy. So, we'll see, but yeah, I think the more it goes down, the more it's going to spur the market.
Well, hey, that's my prediction. I'm not good at predictions. That's why
we'll say we got the tape. We'll roll it next Q2.
We'll roll it at the end of July. Hey, I said July 31st, didn't I? Not July 1st.
Okay, so we'll roll this Q3 of next year and see what happens.
We'll see. Hopefully, fingers crossed that we get there, because that would really fuel the economy and make everybody feel good right before, going into the last cycle of the election,
It would be, but the one thing about being an investor is you have the flexibility to change and maneuver. If you're anyone that's reliant 100% on transactions, which is, lenders and realtors, then it's a little bit more challenging. But that's why I've been telling agents to focus, become an investor agent, become an invested agent, because you can go out there and you could buy their house or you could list it. You have a little bit of latitude, and then you also should be building passive income, whether it's through EXP rev share or it's your own rental property or short-term rentals, giving you multiple streams of income. But from a client perspective, or a transaction perspective, being able to be in the room and, hey, if they don't want to take your 65% minus repair offer, but they do want to sell it, you could help. You could
Yeah.
help.
Yeah,
And it's
absolutely.
just going to get you more transactions.
Absolutely. Well, Chris, thank you so much for your time today. I know you're a very busy man, and I appreciate it. Great talking with you, like always. And you know, if we can ever do anything for you or any of your clients, you just let us know. Okay.
Always a pleasure. Love everything y'all do.
Yeah. Thank you so much, buddy.